Good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation of how to profit from small cap winners. Presenting today is Nick Webb, Senior Vice President at Chaikin Analytics. Now, throughout our presentation, please submit your questions through the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. This webinar is being recorded, and a copy will be sent to everyone who has registered. Now, a bit about our presenter. Nick Webb joined Chaikin Analytics after having spent 20 years at Thomson Reuters, where he contributed to the development of financial solutions for trading, pricing, and a variety of other areas. So now to get us started, here's Nick Webb.
Everybody that turned out tonight, hope we will make this a fun, informative, hour-long session. I'll try and keep it under the hour, and we'll see how we do. But it's a great topic, and it's a great time to have the topic. Small caps represent a real opportunity. I've been a big fan of them since I got here at Chaikin Analytics, and Chaikin Analytics has a tremendous system to help us sift through all of the small caps and find the real winners. So today we're going to cover that, and hopefully you'll find some real interesting ideas about Chaikin. So just real quickly about my background. As Joe said, I've spent 30+ years in the financial services. I spent a lot of time working here in the US with some of the top money managers in the country when I was working both at Baseline as well as Thomson Reuters, and literally worked with 75% of the top 100 money managers, working with them on a number of things, but really trying to help them improve their investing techniques using our tools. And so I've worked with some of the smartest institutional investors, both on the buy side as well as the sell side. And I've learned just a lot from them. They've been great mentors. And hopefully that I will be able to share with you tonight. In addition, since I've been here, I've been working very closely with Mark Chaikin and learned a ton from him as well. So it's a great learning atmosphere here at Chaikin Analytics. So again, in the next 45 minutes, what I think we're going to cover is how are we going to profit from small cap winners. We're going to go through and specifically find how to find high performing small caps quickly and easily, not take years of research, but really find a way that we can zero in on the right stocks immediately. We're going to try and find ways to minimize risk. Are there ways that you can put the market in your favor so that you're not really taking as big a risk when you invest in small caps, that you've put everything that you've got at your disposal in your favor? We're going to find specific ways to avoid pitfalls in small cap investing. Look, if you invest in small caps, you're going to have some losers as well as winners, but you know, there are ways you can avoid the losers more frequently. And so we're going to really cover that as well. We'll talk about timing decision secrets. Again, if you do timing correctly, you can both preserve your winnings, but also in terms of your entry points, you can add a % or two to every single decision you make by picking the correct timing. And then, of course, there's the #1 thing you must know to profit in small caps. If we can cover all of this in 45 minutes, I think we're going to be in good shape. Additionally, one of the things I wanted to do today is change things up a little bit and make it much more interactive in a couple ways. One is to poll the audience on things as we go through the webinar, but also I wanted to make sure that you actually got to see some of Chaikin Analytics live when we're actually doing what I say we're going to do, which is finding these high performance small caps. So we'll try and make this fun, try and make this interactive. And you know, if you come away with these things, I think it's time well spent. So onwards. So first thing is, let's start with the interaction. We are just coming out of the Q2 earnings season, and I would just love to get a temperature of the audience in terms of how do they feel about earnings? Do they feel the companies are living up to their valuations, and do they feel good about the earnings season? So Joe, can I turn it over to you to do the polling?
Absolutely. So I believe right now, right front and center, hopefully you'll see a few options. We have a few different responses that we commonly hear. So how do you feel about what we just saw in second quarter earnings? So are you feeling great? Solid earnings season? Looking forward to more coming up throughout the rest of the year? Are you a bit mixed? Maybe it was good, but there was also some bad. Do earnings have you concerned, or perhaps do you not follow earnings? So go ahead and take a moment, go ahead and respond. It looks like about half of you already have, so thank you very much. We'll give you about, I guess, 10 more seconds, and then we'll take a look at the results here. All right. And see, there's a few more still trickling in, and we'll call it right now. So let's go ahead and take a look at what we got here. And let's see. All right, Nick, your reaction?
I can't see it on my screen.
Okay. Oh, well, there you go. Well, I'll tell you. It looks like the biggest result was mixed. 64% of people who responded said they're mixed on earnings right now. Looks like second place, though, was great, solid earnings. So about 20% of the people responded with a great response. And then everybody else kind of worried or don't follow earnings seem to be the lower responses. But the biggest result was definitely mixed feelings.
Right. And I should have cheated and said all of the above, because I think this was an interesting earnings season, I've got to say. And, I just did a blog article for the Chaikin Analytics blog covering Q2 earnings. And so I delved into a lot of the different estimate providers, FactSet, Thomson Reuters, Bloomberg, and they all released sort of their synopsis of what went on in the earnings season. And it was interesting. So the people that said it was mixed, I kind of agree. And the people that said it was great, I kind of agree, because we got a 10% year-on-year earnings growth. That's pretty good. Even better is the 7 earnings surprises to every 1 earnings miss. So more companies were actually reporting earnings surprises and very less were reporting earnings misses. So, it was one of those things where, leading into the earnings season, if people had been taking their estimates down and they were manufacturing those earnings surprises, you could understand that, but they weren't, so 10% earnings growth with a lot of earnings surprises, really very encouraging. Utilities and financials led the way. They had very strong earnings. Encouraging also was that energy seems to have bottomed. But there was one statistic that stuck out, and it hasn't happened for the past 25 quarters. So it's a little anomaly. And that is that when a company reported earnings surprise, on average, the price impact of that earnings surprise, how the stock market moved in reaction to that for that particular stock, was actually down by 0.3% for the day. So even though they reported an earnings surprise, beat earnings estimates, the market did not react positively to them. And that's the first time that's happened in 25 quarters. So to the people that said mixed or that they were worried, they absolutely have a reason to be, because that's an unusual statistic, and it's one that shows that the market's sort of sitting out there and they're seeing the valuations in the stock market at, a fairly high forward price earnings ratio for the entire market. And so that 10% earnings growth is absolutely required to keep valuation strong. So there's still, I think that shows the nervousness that is in the market. There's a lot of good news already priced into all these individual stocks. So I think that's the message you take away. So really, where is the market going to go? And I am not a crystal ball prognosticator, but we've been touting this slide all year. And it's basically research that was done by Bank of America, Merrill Lynch. And it basically takes a look at the various likely scenarios of what's going to happen for 2017. Now, Merrill Lynch was very prescient because they put this out before 2017 started, but we're still using it today. And what it basically says is the most bullish scenario for stocks is when rates are falling and earnings are rising. I mean, that's kind of like a no-brainer, right? You know, companies are performing and they're competing against very, very low interest rates. And so that's obviously the most bullish scenario. For the first 5 years of the bull market, that's what we experienced, and that's why it's been such a great long run. In 2015, we experienced falling rates, so interest rates still coming down, but earnings all of a sudden sort of hit the skids, which isn't devastating for stocks, but it's not as good. You know, it's sort of falling behind. And then in 2016, 2017, we were looking for, you know, rates to increase and earnings to rise. The good news is earnings are definitely keeping up their part of the bargain. But what's interesting is if you take a look at the long-term interest rates, and I wanted to give you guys a long perspective, so I had to go out and find this chart. Basically, interest rates really are at all-time low still. They had a little bit of a blip. You can see at the tail end of the chart that they did sort of look like they were beginning to increase, but since then they've actually had a little bit of a retreat. So these are still low long-term rates, and that means that the market for stocks is still good. So I think if they can keep up with the bargain that they've created with investors that basically say, you know, I've got a high valuation, I've got to have good, solid, decent earnings, and then I'm justifying the valuations that are out there. I think the market sort of is saying, okay, that's where we are right now. But it does require that those earnings continue to come in strong. So a couple things that I would, you know, just keep your eyes on in the future. First is, do the earnings continue to grow at double-digit rates? That's a solid earnings quarter. And if that continues, then I think we're in good shape and the market will continue strong. The second thing is that price impact. If you start seeing that price impact getting worse, where there's more and more punishing of companies that outperform the earnings, again, I think that's another warning sign. So I would say that I feel okay about the Q2. I think the market is solid. I think the fundamentals are well pinned here, but you know, there's some nervousness in the market. There's no question. I think I've read more about pullbacks, corrections, and bear markets in the last month in all the literature that's out there. So there's definitely more and more talk, and that's natural because we're still sitting here 8 years into a bull market. Everybody knows at some point what goes up, there must be something on the other end of it. But the good news is I think we still have some very strong fundamentals on this market. So I'm not sure I'm as gloom and doom as some of the prognosticators out there. But again, you know, anything is possible. So if you look at where the S&P is, and you can sort of see it's been a nice run, and it's been a nice run this year. The Chaikin money flow is strong. The trend line is strong. But you know, as you go up here into the far right, you can see that the market really has sort of broken through some key support and resistance. And so, you know, we're sort of looking at potentially, you know, a small correction and then back to where we were before. But you know, ultimately, this is still a good, fundamentally strong market with strong earnings and low interest rates. So I think we're in reasonably good shape going forward. But you know, what this highlights is there is so much information overload out there in the marketplace, not only on the market in general, but in individual companies. There just is so much coming at individuals today that it's very hard to stay on top of everything that's going on. If you think about it, you know, there's as many people saying that the market is going to go down as they're saying that it's going to go up, and they're all writing and they're all trying to add hyperbole into this so that you watch their show or read their newsletter. So there's just this information overload. And that gets in the way of successful investing. So what I think we're trying to do here at Chaikin Analytics is to create a very disciplined methodology. And particularly in small caps, you really have to stay with this methodology or stay with any disciplined methodology to be effective. Small caps have obviously a lot more opportunities out there. There's more companies, there's more names. They are less picked over than the large caps, and but they also have imperfect information. So if a large cap, just take Amazon for instance, has 45 analysts scouring through Amazon's every facet of their business, that's simply not true in the small caps. They're lucky if they have 3, and those 3 analysts don't have a much broader portfolio of companies that they have to follow. So they're not as precise as the large cap analysts. And so you're dealing with a lot different sort of environment. And the good news is that goes to Chaikin Analytics' strength, that sort of pulling a quant model together. So in our world, we sort of use the Chaikin methodology at top. We augment it with some buy-sell signals, and then we put some technical indicators down. And if we wrap all those up into a very disciplined methodology, which we'll cover today, we think you can be very successful. So you definitely need an edge, and Chaikin can provide that directional edge. We talked about that what we are trying to do is blend our fundamentals, our technicals into this quantitative model so that you do get that directional edge. We also provide you with a whole number of signals, relative strength signals, oversold, overbought signals that basically help you with your timing, get you better entries and exits. And when we go into the sort of live part of this program, hopefully you'll see some of those, and that'll show you how accurate those are in terms of timing your entries and exits. And what it does is it cuts through all of the clutter. So the power gauge itself is very simple. It just shows you whether we're very bullish, whether we're neutral, whether we're bearish, very bearish, and then it breaks it down into some of the factors that add up to the power gauge model. And particularly when you're looking at small caps, if you look at that spreadsheet at the right where they're, that's an analyst model that they're trying to figure out the ROI, and that just takes way too long for an individual investor to analyze a particular company. You need something that is going to cut through all the clutter, give you a very reliable signal as to whether or not a company is worthy of investing in. So we think the solution is Chaikin Analytics, and we've done a lot more than just give you a power gauge. We've wrapped a whole system around it that helps you sift through all of these opportunities and figure out which ones are the right ones for you. And again, we're going to spend some time going through that so that hopefully by the end you'll feel very comfortable with our process and our methodology. So before we do that, though, there's really some sort of, I guess, what I would call Chaikin fundamentals. There's some elements to this methodology and this process that are time tested, they work, and it's important to understand them before we get into the product itself. The first is showing you how to find classic bulls. What are we looking for? What are the things that really determine a classic bull? And then showing you how to avoid the reverse, which is the classic bears. There's also a concept at Chaikin Analytics called the personality change. And that's a very, very powerful concept because over and over and over again, we've seen it where a stock exhibits a personality change, they absolutely move in that direction for quite some time. So we'll talk about that as well. And again, we want to make sure that all things are lined up. You're giving yourself your best chance to succeed. So we'll talk about how you can put the wind at your back by picking great industries. And then ultimately, when we get into the demonstration itself, we'll talk about timing decisions because as I said earlier on, you can add a few percentage points on each trade. So it's well worth exploiting that. And sometimes you got to wait to make an entry. And other times when you're making an exit, knowing when to exit is really, really key. So once we do that, then we'll go into the live part of the demonstration. So let's spend a little time. What is a classic Chaikin bull? And really there's three things that define it. I actually am a little more greedy. I actually have raised it to 5. But basically it's everything looks good on a particular stock. There's nothing mysterious about it. You know, we want the power gauge rating to be bullish. We want relative strength to be strong, and we want the money flow to be strong. And so this is our standard Chaikin bull slide, and you can see it looks at advanced materials. Now, what I do when I'm doing a webinar is I go back to the last time I did a webinar, which in my case was June, and I pull out the slides where I showed the classic bull and the classic bear. And then that gives you, in a sense, how did I do? So here is the slide we had in June about applied materials. And you can see that everything was very strong about it. The power gauge rating was very bullish. You can see here, Chaikin money flow is very, very strong. Down here below, relative strength. The last thing, just to direct you to this shows the trend of when we went in and out of being bearish, bullish on a stock. So you can see where it's green, Chaikin was very bullish about this stock. So you can see it was right pretty much for the whole year. So how did I do on this? You know, this is what we were saying looked like a classic bull. Well, it still looks like a classic bull, but less so. It's sort of been struck by the market just like every other stock a little bit. There's been some pullback, but it's been hanging in there pretty well. So from when we took a look at it in June to now, it's flat to just slightly up. And you know, there's some chinks in the armor. You can see it's now gone neutral. And the reason it's gone neutral, which is a fine point, is it's actually below its trend line. So you can see over here, it says neutral plus. What that means, and this is a fine point, I'm sorry to get into it at this stage, but it basically says this would be rated bullish or very bullish, except for the price is now below its trend line. And so anytime that happens, it actually takes the rating from bullish and calls it neutral plus, neutral with a positive bias. So it's still a bullish stock in my eyes. It's just had a little bit of a pullback and it's still going very, very strong. What's encouraging is it just had a very nice earnings surprise a couple days ago. So what's another, if I was to pick a bullish stock, a classic bull right now, what would I pick to look at? In this case, I'm going to pick Blue Cora. And I told you I have expanded the classic bulls definition beyond just the 3. So let me walk through exactly what I think is highlighted with Blue Cora. First of all, it's very bullish, no question about it, very strong. Second of all, it's in a strong industry group, which is solid. Third is it's got, whoops, didn't mean to do that. Third is it's got really good earnings surprises. We actually labeled the earnings surprises. So when it's green, that means that was a positive earnings surprise. Fourth, it's got great Chaikin money flow. And fifth, it's got terrific relative strength. And ultimately, this power gauge has been green the whole time. So this is a very, very classic bull stock. And I chose Blue Cora because it's in my small caps. So it's showing up on a very regular basis in my small cap screening. And so I've gotten familiar with it over the past couple months. But again, very solid looking computer software company. So on the flip side, what are we going to sell? And what we're going to sell is the classic bears. And when you start seeing the various pieces of our ratings falling apart, this is really a good time to examine whether or not you want to keep that holding going. So in this case, in June, we looked at Under Armour. So let's take a look. So in June, you had institutional selling, you had relative strength very weak, you had, sort of mixed earnings surprises. More importantly, you had a very bearish power gauge rating, and this to me was a very bearish stock. So how did we do? Well, if you had listened to us and gotten out of Under Armour at that time, you would have saved about a 20% dip since then. So again, it's one of those things where, we're not right all the time, and I never would say we're right all the time, but there are times when you've got everything going in your direction that you feel fairly confident in what you're saying. So what's a good bear to go with right now? What should I say? And you know what? I'm willing to just leave my money on Under Armour or off Under Armour, as the case may be. This is still a stock that's still showing negative money flow. The institutions use the slightest blip to get out of it, and now they're back to selling. Some institutional money is flowing out. That's shown by the Chaikin money flow. You can see it's got a horrible relative strength, and it is still very bearish. So net, this is a very bearish stock that still looks like it has a ways to go. So while that's simple and that power gauge rating is very easy to read and understand, it's really important to, we're not just throwing out these ratings willy-nilly. There's a lot going on behind the scenes, and there's a lot more that meets the eye. So that when we're, in the throes of this, you should be very confident that there's a lot of analysis behind these numbers. So let's talk about the power gauge rating for a little while. Again, very simple summary of the stock's potential. It's supposed to give you a 1 to 6 month window into the success. Not a big fan of the way they have this chart coming up. Come on. I'll get there. Okay. So these are the 20 factors. As I said before, there are 4 primary factors. The financial sort of health of a stock. You can think of that as sort of the Warren Buffett kind of looking at a stock. How much debt does it have? What's the price to book value, return on equity, price to sales, all the kinds of financial metrics that a value player like Warren Buffett would look at. The earnings side sort of looks at, well, what's the reward for this? If financials sort of says it's fairly rated, earnings sort of gives you what's the upside here. And then technicals show you whether it's, the markets agrees with this assessment. Is money flowing into this? What does the price trend look like? What's the volume trend? What's the relative strength? And then finally, the experts. And experts is kind of a mixed category. There's a lot in there. There's the analyst estimates trend. So are the analysts raising their estimates? Is there a lot of shorting going on in this particular stock? Again, we don't get this on a daily basis. It's every other week we get a new look at this, but it's really critical data. Are there insider activity? Do we see the insider selling or buying their stock? And then one of the key elements is, what is the industry relative strength? Not really fitting into the expert category per se, but it's really important nonetheless. So all of these things go into a huge pot And like I said, it's very weighted towards the fundamental and earnings and experts categories, and it comes up with this overall rating. So how does it do? I mean, why should you trust it? Why would I trust it? I do trust it, by the way. I've sort of gotten frozen here. Hang on with me. Oh, God. Let me go to the next slide. Okay. Let's just try and skip over this problematic slide. Don't necessarily take it from me, take it from John Carter, the CEO and founder of Simpler Trading, one of the better traders on the, on the street. Makes a ton of money on a regular basis. He uses Chaikin Analytics all the time. John tends to have much more shorter plays. He tends to be a swing trader, options guy, but if Chaikin is not in his direction, he does not use it. Does not use his stock pick. And you can see that if you look at the power gauge ratings for 2016, if all you'd done is picked very bullish stocks, you would have had a 32% return, whereas the average stock market picked 24%. And it works on the downside. In 2015, again, if all you'd done was pick very bullish stocks, you would have gotten a return of minus 1.29, which sounds horrible, but relative to the average stock of minus 7.65, you can see where just paying attention to that power gauge keeps you on track and keeps you from making major mistakes. It is the single best indicator that can both make you money, but also keep you out of trouble. So another thing that we talk a lot about at Chaikin is basically spotting personality changes. That means when a company is going from being a relatively bullish stock to all of a sudden losing its mind and turning over to the bear side, or vice versa. So these things are absolutely, when you see them and it's a stock that you're either watching or holding, this is where you really have to pay attention. So let's go through an example of this. Here's Anthem. And you can see back in November of 2016, there was a very, very strong personality change. The relative strength went from being very red to being very green in a very short amount of time. And that, along with a very bullish power gauge rating, was enough to really trigger what's turned into a very nice 9-month run. So that was one, believe it or not, that was called out in December and January as it was unfolding. And if you'd listened to Chaikin at that time, could have had a very nice stock, nice run. And the good news is it's really not too late to get into it. There's still some, it looks like there's still some upside ahead. On the other side, if you've been reading any of Mark's pieces recently, you know that he has been very strong against the auto parts industry. Whether it's O'Reilly Auto or Advanced Auto Parts, what he saw early on in the year, or actually at the tail end of last year, he saw that they were about to really go through a bearish personality change. They were going from being a positive relative strength to being negative. In addition, he saw that the power gauge had gone very bearish and that money flow was leaking out of these stocks. And he's been warning our investors ever since. And he's been really strong and out front with these calls. And you can see, there was just a massive gap down. And actually, it's funny that poor O'Reilly, they actually had a positive earnings surprise. This gap down actually happened when advanced auto parts missed earnings by a significant amount. O'Reilly was washed out, with the same sort of negative sentiment towards the auto parts companies. But again, if you saw that bearish personality change, you saw the bearish power gauge, and you saw money flow flowing out of the stock, that's just a sign to run. Not walk, but run for the exits. So those are the Chaikin funnels, if you will. And they're not that hard. I think anybody can use Chaikin. Anybody can use it very, very effectively. It is not built for rocket scientists to have to operate. And you'll see when we get into the actual operating of this, that it's very straightforward, it's easy to use, and it's something that I think can save a huge amount of time because it concentrates a huge amount of information at your fingertips. But let me make a little bit of a case for the small caps. Right now, at this moment, I think that they are in a tremendous space because I think the large caps have been relatively picked over. You think about the FANG stocks and you think about some of the others, they have absolutely sort of had almost like a mini bubble in them, and some of it's starting to break now. As a matter of fact, Mark just came out very, very strongly that Amazon is now in bear territory, is bear rated, and he thinks that there's some real troubled times ahead for Amazon. Not to say that it'll always be a bear, but he thinks that it sort of got a little ahead of itself with its valuations. The other reason I think small caps are great, it's just perfect for a quant model. Because you're not going to spend days analyzing a single stock, a quant model like Chaikin Analytics or others that are out there in the marketplace allows an investor to sift through many, many stocks and find the ones that have that perfect recipe that you're looking for. And when you have as many opportunities as you do with small caps, it means that you're going to find the right ones. You don't have to settle. So if I don't get all 5 things that I'm looking for, you know what? I don't buy it. I just move right on. So the other thing is, and I've already talked about it, the analysts on the street are focused on the large caps. There are a few that focus on the smalls, but the smalls only get, instead of concentrating it down to 8 companies that they cover, analysts have to cover 100 or maybe even 25 to 50, but they have to cover a whole bunch of them. So they don't really have time to do the deep analysis. So again, that fits. If you have a good quant model, it fits. You can compete against the institutions. And then last, there's just a lot of companies with great stories. And I think as we go through in our demo, you'll see that. So I think there's a lot there. And if you take a look at how we performed, we created these indexes back in 2014. And over this time period, all the way up through March, and I do need to update this slide, but all the way up through March, we've had excess returns relative to the benchmark. So in the large cap, we've had 612 basis points. So we've outperformed it by over 6%. But if you look at the small caps, we've almost doubled the benchmark performance. And that shows what having a great quant tool can do for you. So regardless, if all you do is follow the power gauge rating in the small caps, if we keep going with this performance, you'll almost double the Russell 2000 performance, if you will. And then dividends has also had very, very strong performance. So some rules for small caps in terms of investing. And, the first one, I've been beating it, but I can't beat the horse enough. It's trust the power gauge. You got to believe in it. You got to put it to work for you. And realize, again, that it's very much of a fundamental model. It's 85% fundamentals, only 15% technicals. The The other thing is be in the right place at the right time. Focus on picking stocks in strong industries. It seems obvious, but you'd be amazed at how many times people don't do that. And we'll show you how to pick strong industries. And use great timing. Again, seems obvious, but if a stock's had a huge overrun, let it come back a little bit before you get into that stock. But also have a relatively strong trigger finger to get out of that stock when necessary. One thing I say with small cap, I say with all stocks, but really in small caps, make sure you diversify. Chaikin Analytics, as good as it is not going to be perfect. There are going to be times where it steers you wrong. So you want to make sure you've got eggs in different baskets. And that includes eggs in different industry baskets, because if you say you get the industry wrong and you have all your stocks in that industry, that does not help you. It will, sometimes, a good tide will raise all boats. The opposite is true as well. So you want to make sure you've got a reasonably diversified set. The rough rule of thumb, and you can see it if you look at the the investment frontiers and things like that. If you can get 5 stocks in 5 different industries, you've already gone a decent way towards diversifying it. And then the last thing is, don't ever get emotionally attached to your stocks, especially the ones that have really worked out well for you. You sort of got a place in your heart for them. I do it all the time, and it's like, you got to remember, you got to play defense, you got to monitor, and where you see things falling apart from a fundamental standpoint, you got to be willing to sell those stocks, even if you've already had a little bit of a giving back some of your profits. Hard to do, but it's absolutely critical. So before we go into the demo, I just want to spend a little time on industry group strength or weakness. We talked about it, but it's so critical. The tailwinds just help you get long profits. If you're running in with weak industries, you're gonna fight upstream. We do a number of different things within Chaikin Analytics, and there's a number of different ways you can craft this. What we tend to do is we have what we call a power bar rating for industries, and all it is just an aggregation of the number of positive bullish stocks versus the number of bearish stocks. So you can see aerospace is having a terrific run. It's got 11 positive bullish stocks versus no bearish stocks. Utilities, same thing, it's just really doing quite well. And so these are the industries that we'll be looking to when we go in and start looking around for stocks. And if you want to go at a higher level, we do the same kind of thing for sectors. And you can even pull off sector performance. And so you can compare, do these power bars work? You can sort of see the 3 lowest power bar sectors have some of the worst performance. So, it does tend to nicely coincide with the power bar. So let's go find some stocks. And so you're going to have to bear with me while I try and bring up my, hang on, didn't want to do that. Hey, Joe, can you, oh, here we go. So new share, and I'm going to share my desktop at this point. And I'm going to go over to Chaikin Analytics. Okay. So the first thing I'm going to do, again, this is the same screen that I was showing you earlier. I've got a list of stocks down the left-hand side that I'm looking at, but here is the rating that we were talking about. Here are the earnings that we were talking about. Here's the money flow, here's the relative strength, and the power gauge, as well as the industries. So again, this sort of gives it all to you in one screen. And you'll see when we're screening, there's a real advantage to that. So let's go find some stocks. So right now, what I'm going to do is I'm going to go to all rated stocks. I'm going to look for only very bearish stocks. And I'm going to look for strong Chaikin money flow, strong relative strength, and industry relative strength that's strong. And then I'm going to nail it down to just the small caps. So you can see it doesn't take too long to build a screen, and then off I go. I'm screening, and voila, I've got 30 results. And 30 is a good number. You'd think in a typical program that may be too much, because that's a lot to look through and a lot to analyze. And before everybody heads for the exit, we won't go through 30 today, but we will go through a number. And what I will do is I will bring this up into the workspace. And so now you can see those 30 stocks are right here down this left-hand line. So now we can go through very quickly. And oh, there's Blue Cora. We were talking about Blue Cora. I was telling you it shows up on my screen virtually every time. And it's definitely a classic bear right now. You can sort of see the power gauge rating. You can see relative strength. You can see money flow, you can see strong industry, and you can see very bullish. It has all 5 of those checks for me, in addition to, earnings surprises. Mark always says that earnings surprises come in bunches. That's absolutely true. I think the research is that if you've had 2 earnings surprises, I think the chances of having a third earnings surprise, that next one, is something on the order of 80%. So it's very, very true that they do come in bunches. So if you get a good one that's just started having positive earnings surprises, you can ride that for a while as it's having great earnings surprises. There's a benefit to an earnings surprise. If you get a good earnings surprise, the next thing, so the stock has a nice move for that. The next thing that happens, and you'll notice it happens within a couple weeks, is all of a sudden the analysts will start raising their estimates for future quarters and years. And all of a sudden, when that happens, each time an analyst raises an estimate, you get another nice price movement. So there's real positives to a good earnings surprise. So now I'm going to turn it over to Joe for a second. What I want to do is let you guys ask which stocks out of these that you would like to look at. And before I do that, I'm going to take you through a couple of my favorites. But while I'm going through here, if you see anything that's interesting to you, please put it in the chat window, and Joe will relay that on to me. One that I found that I thought was very interesting was health insurance innovation. And again, this is one that's been, over the last 2 or 3 months, has all of a sudden started cropping up on my screens. You can see it went bullish in May. It's got great relative strength. It had a personality change at that same time in November that the other 2 did. It's got great money flow, good earnings surprises. This looks like a very solid stock. Actually, you know what? It was up 2% today. So it's had a nice little run. But again, it exhibits all the characteristics of a stock that's got some play. And if I go further down here, this list of all the stocks that pass the screen, another one that I like is QLYS, Qualys. And again, it's computer software. So I wouldn't buy both of these because they're both, well, they're kind of in the same industry, but one's computer software, one's healthcare, back office, computer software kind of stuff. Qualis is an interesting one. By the way, this is really handy for small caps because most of the time you don't know what they do. You can click this I button and it just tells you what it does. Cloud security and compliance solutions. I can't think of a better space to be in these days. So again, I think they've got a good space. They're in a good strong industry. They've had some nice positive earnings surprises, decent money flow, good relative strength, and a good power gauge. So I tell you what, why don't I do this? Why don't I gradually click on a couple of these, and if any of them catch your interest, tap into Joe so that, and he'll alert me as to which ones we should follow a little bit more closely. I did say it was going to be interactive.
There are about 2 of them here, if you'd like to start out. How about we take a peek at ENZ?
ENZ. Okay, so a drug industry, again, industry is a little on the weak side, believe it or not. Drugs used to be just unbelievably strong for so many years, but they've run into little headwinds now. But very bullish rated, so strong in that regard. Money flow is mixed. You can sort of see money is flowing out of it right now. Good relative strength and a great track record in terms of the power gauge rating. So it'd be one that I would not probably dive in. Again, I'm one of those guys where there's so many stocks in this universe that unless I have all 5 things going in my direction, I stay away from it. And this would be something that would be in my watch list. I think it's a solid looking stock, and it very well may do extremely well. Like I said, it's very bullish rated. But again, I'm very greedy. I want everything in my direction. So I would hold off a little bit. What was the other one?
There's one other one here, a little bit of a different setup, is SJW.
SJW. All right, let me take a look at that one. Okay, utilities. Now, surprisingly, and that says weak, but as you saw, utilities was one of the more powerfully rated by the power bar. So, it's sort of, we've got a disagreement within the product itself. Again, very bullish power gauge. Of course, everything on this list is going to be very bullish power gauge. What's interesting, though, is that you can see here it just had a power personality change. And so you've got a little bit of money flow. This is almost immaterial right now. But you've got the personality change. You've got it turning bearish. This is definitely one to keep an eye on. There could be some nice momentum behind this stock. So this again is another one of those that I would keep my eye on. By the way, I save the screen. I run it once a week. I look at all the new things that have come in, and I keep track of these stocks so that when I see a new name that I haven't explored before, I can drill into it, find out a little bit about it, and that's how I keep on top of it. As you can see, it only takes 5-10 minutes to do this screen. It doesn't take a lot of time. So, so that's it. I wanted to do one last thing, which is just test the audience, see if they've been listening. I'm going to put up Webb.com group and give me a sense of whether this is a buy or not. So if you could chat into Joe and say B if it's a buy, S if it's a sell, that would be great.
All right, let's see. B as in buy, S as in sell. If you don't mind, take a moment. The Q&A window is available for you. So go ahead and take a look at what you would think. Again, keep in mind with the power gauge rating, just as you mentioned, these of course are stocks that you would look for as a buying opportunity, given the overall power gauge rating. So let's take a look here at, I may have accidentally given it away, but I'm seeing a lot of S's come through here, Nick.
All right.
Yeah.
Well, that's the beautiful thing. I would say this actually looks fairly strong. It's got, good relative strength, or just the start of a decent relative strength. But it's got some things that I would look at and say, I am not going to buy this stock. And part of it is the earnings recently have just been meeting expectations in a small, oh, I'm sorry, there are no estimates. That's odd. So this must be a very small company. But the very last one where there was an estimate, it missed estimates by a huge amount. So there's enough, and again, I'm greedy. I want to have everything in my direction. So I would hold off on this one because I don't see enough in this. So I think the S's have it. So glad to see people are listening. Again, it's one of those things where in small caps, there's so many different places to play. It's good to just pick the ones that have everything going. Okay, so now I'm going to try my technologically deficient way of getting back to my, I guess I got to go to my desktop and then go back to my presentation. Joe, can you see my desktop now?
We do. It looks like you're in your Google Slides, and then there you go. With present,
All
we're
right.
full screen. Great.
Okay, cool. So we sort of said in 45 minutes, and I guess I did go over. I apologize. We're going to do all of these things. So we found a way to really look for high-performing small caps. I think we really discovered ways to minimize risk. The 3 ways to avoid pitfalls, and that's money flow, the power gauge, and the relative strength. And then I'm sorry we didn't spend enough time on timing decisions, and I guess we've run out of time. I had some timing decisions built into some of the stocks I was going to show you, so I apologize. We did not get there. And the number one thing you must know how to profit, to me, it's you've got to be in Chaikin Analytics, because for small caps, this allows you to do the kinds of work that we just did, sifting through hundreds of companies and finding the real gems. And I only showed you a small piece of Chaikin Analytics. One of the things I didn't show you was our options play, which allows you to look at option strategies. I didn't show you our discovery engine, which is really a fabulous way, sort of like a Pandora for stocks. You put in a stock you like, and it gives you the 5 or 6 that really match it. So I only showed you a small piece of the overall service. John Malden, again, who's one of the, sort of industry mavens, his analysts, Ed D'Agostino and all the people that work for Ed basically use Chaikin Analytics. And they have all of our charts in their writings, and they use it all the time. And they actually say they can't imagine living without it at this point. So it is tremendous, that market, or that John has come out so strong for us. So typically, Chaikin Analytics costs $19.50 a year, but we have a deal for you. For right now, we're going to mark the price down by $200 per year, and so it's $17.50 per year. And there's a lot that comes with Chaikin Analytics. It's not only the system that you saw. There are small group tutorials. I've got a slide later that talks about all the things we do. We don't just leave you there in Chaikin Analytics. You get a morning's insight letter from our market strategist, John Schlitz, who is outstanding. He is, it's like getting the inside scoop from, a institutional market strategist. You've got Mark Chaikin's Sunday Market Insights weekly letter. And it's about an 8 or 9 page letter, and it is so chock full of information, and it comes with some recommendations. It's really a must read. And so all of this is part of the subscription. Plus, for this webinar, the first 5 people that sign up, we're going to send out a dot, an Amazon dot. And I know we said we were going bearish on Amazon, but the dot, we've just built a skill, and we're having fun with it. But basically, you can ask an Alexa, whether it's the Echo or the Dot or any of the other Alexa sort of mechanisms, you can say, what is the Chaikin Power Gauge rating for IBM or AMAT? And it'll actually respond with whether it's bullish, bearish, or not. So to commemorate that, we're going to give 5 dots out to the first 5 subscribers. I did say that we don't just leave you in Chaikin Analytics. We're holding your hand the whole time. Not that you need hand holding, but we want you to get the most out of it. So the first thing we have you do is attend an onboard session so you really get the gist of how to use Chaikin Analytics. And then Joe, who's on the phone with me, hosts pre-market sessions with John Schlitz 2 days a week. There's an open forum workshop again on Monday at market close. And then there's an option strategy session, again hosted by Joe, Tuesdays and Thursdays. And we've just gotten rave reviews. We added a 3-part options training by our options specialist, Josh Minlin. And so it goes for 3 weeks, 1 session a week. And people, it's free, it's part of the service, and people are loving it. And additionally, if after all that you still need a little help, we'll do some one-on-ones with you. So we're actually going beyond the 1750. And if you subscribe tonight, not only will you get the dot if you're one of the first 5, but you'll also get 1650 instead of 1750. There's 2 ways to do it. You can subscribe online by going to chaikinanalytics.com/profits, or I'm sure Joe will make the link accessible through the webinar site. Or you can call that number down below, 877-697-6783. We've got a couple of great salespeople that are waiting for your call and will actually answer any of the questions you've got about Chaikin Analytics. So that's it. I really do appreciate your coming onto the webinar. I hope you found it informative. Feel free to drop me a line if you want me to cover anything else in the future. But I look forward to hearing from you. Thanks a lot.
All right, everyone. So we want to thank you all very much for coming out this afternoon and joining us for our webinar. Again, that offer from Nick is $16.50 for a full year to Chaikin Analytics, plus that Amazon dot, which I think is pretty cool. So again, as we mentioned, we actually just built out a brand new skill. So simply enough, if you want to figure out which stock that you've been following lately has either a bullish, neutral, or bearish rating, you can very simply just pull up that dot and use that. But again, that's only available for the first 5 users. So make sure to take advantage of that and join us tomorrow also for our onboard session. This is great for new subscribers. We're going to show you all of the ins and outs. There was a question here about when Nick was going through the demo, where were all the buy and sell signals? Well, those of course can be toggled with the program, but we'll show you specifically how to do that on tomorrow's onboard session. So a great way to get started. In the meantime, everybody, keep an eye out for the recording tomorrow. But again, between now and midnight, that's $16.50 for a full year to Chaikin Analytics. You go to chaikinanalytics.com/profit. Or, of course, give us a call at that's 877-697-6783. Again, in the meantime, everybody have a great evening, and we will see you on tomorrow's onboard session.